This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, live from the Bloomberg Businessweek studio in New York. We're on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Businessweek Daily. I'm Tim Stenovec. That is Norah Mulinda. She's Bloomberg News equities reporter. She is in for Carol Massar on this day, Norah, where we're seeing a little bit of a, I guess you could say, relief rally in equities.
Yeah, I mean, we're seeing some of these indexes up a touch. We have communication services, the best performing sector, energy, the worst performing sector right now in the S&P 500.
Charlie Pellet's going to have a deep dive in just a minute. In the meantime, we've got our eyes on pretty much everything that's moving markets this afternoon. We're going to start talking about trade because the president indicated he's open to trade negotiations, including with the European Union. Also, it is a busy week. We've got results from the big banks. We're going to get inflation data. And then there's everything happening when it comes to geopolitics, Norah. And that's where we're going to begin with the latest when it comes to Russia's invasion of Ukraine.
Yeah, lots to really focus on here, lots to parse that I'm really keeping an eye on. And we can definitely tell that Wall Street is doing the same here.
The president threatened to impose stiff financial penalties on Russia if it does not end hostilities with Ukraine. Angela Stent is going to be joining us in just a few minutes. She's of the Brookings Institute, and she's standing by right now.
And speaking of financial penalties, what investors need to know about the latest tariff announcements against Mexico and the EU.
Also on those tariffs, how one S&P 500 company is navigating them. We've got the CEO of Fastenal joining us in just a few minutes. All that and more coming up this hour on Bloomberg Businessweek Daily. First up, a check of the day's trade and top business stories. Here he is. Hey, Charlie Pellet.
Hi, thank you very much, Tim and Norah. We have got the Dow, the S&P, NASDAQ, all advancing. S&P 500 index holding close to the best level of the session, up 9 right now, up 0.1%. But NASDAQ trading at a record right now. The NASDAQ Composite Index up 64. Right now, NASDAQ 20,649, up by about 0.3%. The Dow up 53, up by about 0.1%. 10-year 4.42%, for the 2-year ahead of bank earnings 3.89%. Gold little changed and lower, down 0.1%, 33.50 the ounce. West Texas Intermediate crude down 2.2%, 66.97 a barrel on WTI. Bitcoin back above 120,000 right now, trading at a record today, reaching that level for the first time. Bitcoin up by 0.7%. Meta Platforms CEO Mark Zuckerberg says the company is building several massive data centers to power its AI efforts, with the first one expected to come online next year. Right now, Meta up by about 0.8%. As we have been reporting, President Trump says the U.S. will send more weapons to Ukraine, describing them as top-of-the-line weapons. And according to the New York Times, Andrew Cuomo will stay in the race for New York City mayor to challenge Mamdani. Recapping, S&P up 8, up 0.1%. NASDAQ at a record. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Certainly do appreciate it. President Trump threatened to impose stiff financial penalties on Russia if it does not end hostilities with Ukraine. That's within 50 days, while pledging fresh weapon supplies for Kyiv. Trump said the levies would come in the form of secondary tariffs without providing details. The president has used the term in the past to describe duties imposed on countries for trading with American adversaries. Angela Stent is senior fellow at the Brookings Institution. She's also the author of Putin's World, Russia Against the West and With the Rest. She's a former national intelligence officer for Russia and Eurasia at the National Intelligence Council. Also served in the Office of Policy Planning at the U.S. Department of State. Angela, good to have you with us this afternoon. Secretary Lutnick followed up afterward. He said it would be a secondary sanction, or secondary sanctions, I should say. What exactly does that mean for a country that has had sanctions on it for years?
So the actual tariffs or sanctions on Russia wouldn't mean very much, tariffs, because we barely trade with Russia. I think $5 billion last year. But what that would mean is sanctions on China, sanctions on India. They're the two largest purchasers of Russian oil. Probably a country like Turkey as well, which purchases a lot of Russian oil. So they are threatening those countries. I believe that President Trump said 100% tariffs. There's a Senate bill which would impose 500 percent tariffs, secondary tariffs on these countries that purchase Russian hydrocarbons. So that's the real threat, not so much to Russia.
Angela, how meaningful would it be for these countries?
So, it would be meaningful because they are the largest purchasers of Russian oil. But then we don't know how they might retaliate. India, of course, is a country that's been drawing closer to the United States. So to have that kind of tariff on India would also, I think, affect other aspects of the U.S.-Indian relationship. So I think they're kind of all waiting. I should say that, saying that Russia has 50 days to end the war, you have to realize that Russia is now in the middle of a very brutal summer offensive. And if you give them 50 days, the summer will be over by then. So Russia can still do an enormous amount of damage to Ukraine in those 50 days.
Well, in terms of moving the needle on actually ending this conflict, Dr. Stent, is this enough in your view to actually push Russia to stop its bombardment of Ukraine?
Well, the most important thing at the moment are the weapons supplies. I mean, the Ukrainians desperately need air defenses. They need those Patriot batteries. And today, President Trump said that there's 17 of them available. So what's going to happen is European allies are going to purchase American Patriot missiles and other weapons. They are then going to give them to Ukraine. So that enables President Trump to say to his base, well, we're not spending any more money on Ukraine. Whether that's enough to help Ukraine really give the message to Putin that he cannot win this war, I think that's doubtful. I mean, Putin's not going to stop until he really believes that he's not going to win this. And for that, the Ukrainians need an enormous amount of weapons, including, in the end, weapons that could strike Moscow. But we haven't said that we're going to provide those yet.
Well, let's listen to exactly what the president said earlier. Here he is in the Oval Office with NATO Secretary General Mark Rutte.
Where we are going to be sending them weapons and they're going to be paying for them. The United States will not be having any payment made. We're not buying it, but we will manufacture it and they're going to be paying for it. This is a very big deal we've made. This is billions of dollars worth of military equipment is going to be purchased from the United States, going to NATO, etc. And that's going to be quickly distributed to the battlefield. Ukraine will take it up. And, say what you want about Ukraine. When the war started, they had no chance. And they still would have had no chance if the equipment, they had the best equipment, because we do make the best planes and missiles, and we make the best military equipment in the world by far.
That was President Trump earlier today. He was in the Oval Office with NATO Secretary General Mark Rutte. Dr. Stent, I want to talk about the weapons portion of this and the significance that you see in an environment where many in the Republican Party were happy not to provide Ukraine with any aid. How do you view this politically for President Trump, and also whether or not you think this is enough of a move by the United States? And again, the president saying the United States is going to provide them, NATO member states are going to pay for them. If that's enough to give Ukraine the edge against Russia?
Well, so first of all, this certainly has split the MAGA base, because there's still significant numbers of people, beginning with Vice President Vance, who think that we shouldn't be supplying Ukraine. And then you had the Undersecretary in the Defense Department, Elbridge Colby, apparently order the end of supplying Ukraine with weapons because he thinks only the Europeans should do this. President Trump reversed that order that apparently he hadn't heard about before. So, yes, I think this is still a contentious issue within his base. Is that enough to help Ukraine? I mean, Ukraine just needs an enormous amount of these Patriot batteries. If it gets 17 extra ones, that's terrific. The Ukrainians themselves are manufacturing their own drones now. They're also making deals with European countries to co-produce them. But we really don't know whether that is enough, because the Russians are also stepping up their production of weapons. And they're also using their drones in very creative ways to try and get around some of the barriers that the Ukrainians have put in their way. So at the moment, things are very difficult for Ukraine, and I think only very significant numbers of weapons can help them push this back. And they also do have a mobilization problem. Russia has many more people it can mobilize. It's got North Koreans fighting for the Russians. The Ukrainians do face the shortage. They are so far refusing to draft 18 to 25-year-olds, but they are under pressure from some of the Western countries to do so.
Angela, we saw a report last week that North Korea is supplying as much as 40% of Russia's ammunition. Just how much of an asset is this for Russia?
Oh, North Korea is an enormous asset for Russia now. We now hear they may send as many as 30,000 more Korean troops to Russia to help, and with the ammunition. So without North Korea, it would be very difficult for Russia to do what it's doing. Iran is less important now, by the way, because the Russians are producing their own drones. But I would say the single most important country in terms of weapon supplies right now is North Korea.
Dr. Angela Stent, we always appreciate you taking the time and joining us on Bloomberg Businessweek Daily. Dr. Angela Stent is Senior Fellow at the Brookings Institution, also the author of Putin's World, Russia Against the West and With the Rest. So that's the latest out of Washington when it comes to Russia and Ukraine. Now let's get to trade, because President Trump indicated that he's open to more trade negotiations, including with the European Union, even as he insisted that his letters threatening new tariff rates are, quote, the deals for U.S. trading partners. Josh Wingrove is a Bloomberg News senior White House correspondent. He joins us from our bureau in Washington, D.C. Josh, I want to start with Europe, because I think the big news over the weekend was the idea that the European Union would see a 30% tax or 30% tariff on goods from the country. Obviously, a big deal for a very big trading partner. The president somewhat walking those comments back a little bit, or at least saying he was open to negotiations. What's your read?
Yeah, these letters have been a bargaining tactic, and that one landing in particular in the middle of what have been negotiations between the U.S. and the EU. And that's important because other letters to smaller economies have not really, been that circumstance. They've been maybe token negotiations at most, and the letters seem to be, the last word, or at least one of the last words. So Trump is in some ways trying to set a number, but also invite these negotiations. He's also using these letters, of course, to invite direct investment. Of course, that's going to be not particularly compelling for countries to try to facilitate if they feel like there's a gun being held to their head. So, the EU is, of course, one of the major U.S. trading partners, a lot riding on this one. And the question is, of course, will they land somewhere, or will Trump look at wherever they are in a week or two and think that that's either not enough and stick with the 30%, or it is enough and go to a lower number? Remember, of course, the baseline number right now is 10%. He initially announced 20% on Europe in those initial Liberation Day tariffs. He's threatened as high as 50% on Europe, and is always, that's been kind of one of the top of the list places that he's complained about when he talks about unfair trade relationships. I should note, of course, he posted in the last day or so a complaint that he continues to think the U.S. is being taken advantage of militarily as well as economically. That's a comment to be read in the lens of the EU talks, the Canadian talks, the Japanese talks, the South Korean talks. Trump sees all these things kind of commingled, and some of them they've been publicly resistant to talk about touching, like those sectoral tariffs. So, he's trying to get deals. He doesn't want to really negotiate on some of the things that these other places negotiate. It's tough sledding ahead.
Josh, the EU is definitely a big major trade partner indeed here, but who's really making the most progress here? Is President Trump pulling ahead? Who seems to be budging, if at all, in this tariff war between the two countries?
We don't know, because the EU has been leading the way in terms of countries that have not retaliated, but can. There's a lot of U.S. goods sold to Europe that could face tariffs. Trump is mad about the trade deficit, but of course that is a two-way street that he's talking about. And I think the question here, and we have some reporting from some of our colleagues in Europe, that there are at least some voices wondering whether there should be increased collaboration between some of the Western economies that are all facing similar U.S. threats. Is, do they ultimately all get to a deal, or do they ultimately all decide to push back more than they have already? And right now that is just such an open question. Remember, early on, particularly with China, you saw like tit-for-tat responses from some places that really sort of sent things escalating to effectively trade embargo level tariffs. We haven't really seen that yet, but that doesn't mean that we won't get there. And remember, Trump's threats are so angering people and voters in these other economies and countries and blocs that the political will to bend the knee versus to fight back might become a big factor here at some point. So we just don't know yet where it's going to land with the EU. Remember, some of these tariffs are coming on August 1st. That includes the EU, that includes Canada and Mexico from their letters, even though they weren't facing the same timeline. China remains a big outstanding question. They're not facing that same deadline, but are facing a different, softer one later in August.
Josh, are these tariffs legal? And I ask that in the context of Brazil, for example, because you mentioned the president is and he's made his disdain for trade deficits known, but we have a trade surplus with Brazil. And ostensibly, a lot of these tariffs fall under IEEPA and the Emergency Act that, that gives him. And I'm wondering if these will hold water in the court of law.
The Brazil one, of all of them, is the biggest stretch, I think. I mean, I'm not a lawyer, but Trump's position is that the United States Emergency Economic Powers Act allows him to tariff 50%. To tariff Brazil 50% because of a prosecution going there on one of his allies. I mean, it is just such a stretch, so much a stretch that the bottom of that letter includes Trump saying he's going to launch a 301 investigation, which even if that investigation proves to be a fig leaf, does give him stronger legal authority to impose Brazilian tariffs. In other words, he's giving himself a second option, which is, of course, a tacit acknowledgement that the first option isn't all that much of a guarantee. Now, the trade-off there with 301s is they take time, months, several months usually to enact. So August 1st, he might try to impose those on Brazil, but that is definitely the one that's a stretch. The legal battle over the more broader use of IEEPA, remains. He does have other avenues. Section 338 jumps to mind. He is, of course, continuing to pursue Section 232 powers. The administration has basically said tariffs are going to come one way or another if they don't get their way in court, and that they'll fight this all the way to the Supreme Court if they have to. So we'll see where that goes, but you're absolutely right that there is certainly an open legal question here, or at least that is what every analyst is telling us. But in particular on that Brazil one, that's why I think you might see them pursue that 301 path to give himself a fallback.
Just quickly here, Josh, can we talk a little bit about Mexico? How key is Mexico in terms of the U.S. trade ecosystem?
Huge. And I think some of the news on the weekend that I want to make sure people caught was that our reporting is that the USMCA exemption for trade from Mexico will continue, even if Trump proceeds with that 30% rate. Same deal for Canada. So that is a bit of a change of tune. Trump was interested in really broad tariffs on both those countries in the first hours, if not weeks, of his administration. Now they're saying, look, we're going to have a higher top rate on both Canada and Mexico, 35 and 30% respectively. But they're going to continue that exemption for USMCA compliant goods. Remember, that's the new NAFTA that Trump renegotiated in his first term. These are huge, huge, huge trading partners, not just sources of imports, but huge buyers of U.S. goods. So continuing that USMCA carve-out, Trump's aides always say he hates the word exemption. I bet you they're not trying to use that word around him when it comes to USMCA. But using that carve-out, or whatever you want to call it, extending that really narrows and constrains the impact of his tariffs on Mexico and Canada, his threatened ones at least. But when I mentioned countries that had not yet retaliated, Mexico and Canada are among those. And I think that if Trump is unable to reach a deal and does ratchet up some of those tariffs on those, even in a constrained way, those countries will face questions internally about whether they should respond or not.
Mexico, Canada, the European Union, Brazil, we did it all with Josh Wingrove. We went around the world with Josh Wingrove. He's Bloomberg News senior White House correspondent, joining us from our Washington, D.C. bureau. Thanks, Josh. Coming up, it's a new record today for Fastenal after the company reported earnings. We got the CEO next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ at a record. The S&P 500 index holding close to a record right now. The Dow, the S&P, NASDAQ all trading higher. S&P up 10 to 6270. That is a gain of 0.2%. The Dow up 59, up 0.1%. NASDAQ, as I mentioned, at a record right now at 20,653, up by about 0.3%. Traders sending stocks higher after parsing discussing President Trump's latest tariff remarks. The 10-year ahead of bank earnings 4.42%, the 2-year 3.89%. Gold down $5 the ounce at $33.50, drop there of 0.1%. A retreat for crude oil. West Texas Intermediate crude down 2%, $67.09 a barrel. But Bitcoin, big story there, was trading above $120,000 right now, very close to that level, up by about 0.7%. Best Buy shares lower, down now by 2.2% after earnings, or actually after a downgrade. Best Buy downgraded to neutral at Piper Jaffray, which cites a lack of catalysts and competition. Bank earnings bright and early tomorrow morning. We'll be hearing from J.P. Morgan Chase, Citigroup, and Wells Fargo. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Fastenal shares rising as much as 6.4% earlier in the session. They're up right now 3.4%. It's a new all-time high for the company after they reported net sales for the second quarter that came in line with estimates from analysts, up 8.6% over the same period last year. This is a $52 billion market cap company. They distribute construction and industrial supplies, think nuts, bolts, screws, anchors, rivets, and other fasteners, as well as industrial, janitorial, and safety supplies, cutting tools as well. The company sells to builders, manufacturers, governments, and more. So really, it's a great read on the entire industrial and manufacturing economy, specifically here in the U.S. We've got with us the CEO of Fastenal, Daniel Forness. He joins us from Winona, Minnesota. Dan, welcome to Bloomberg Businessweek Daily. Shares up today, shares up more than 25% so far this year, new all-time high. In the earnings release, though, you said that, quote, the market conditions remain sluggish. What conditions specifically?
You know, we sell to a wide range of customers and industries, as you mentioned, across North America and in 26 countries in total, but mostly in North America. Our customer base has been relatively subdued for the last several years. In the fall of 2022, we saw some indicators saying it was going to slide, and we felt that as we moved into the second and third quarters of 2023. And it's been really weak since then. About 30% of our business is very production-centered business within manufacturing.
So are there any signs that that part of the business is improving, that those customers are seeing sentiment improve? Are you hearing anything from them?
I think the biggest sign that we're seeing is the knife has stopped dropping. You know, we were trying to catch that falling knife for a 2-year period. When I talk to our district and regional leadership throughout the world, the feedback I hear is, you know, they're not talking about this $200,000 a month customer whose business is off 60, 70%. You have a much more stability. Now, it might be stable at a lower level than it would have been 2 years ago, but it's much more stable, and so it allows our inherent growth to shine through.
So we've really been in this prolonged downturn, especially in the industrial economy. Are you seeing any particular green shoots or signs of inflection? And if so, which markets are you most optimistic about? Yeah,
so we're seeing some green shoots. For us, we are seeing some impact in energy. However, I would say that's probably more us taking market share than it is a lift in the tide. About 25% of our business is outside of the industrial, and within there, we're doing quite well. I hear a lot of commentary from our folks with data center builds, with even warehousing customers, and we've made really good inroads over the last 3 years into the government sector, and that primarily was an offshoot of COVID. During COVID, when supply chains blew apart, we stepped in to serve a lot of that market when they were not being served. And those folks have remembered that, and we've grown our business there.
So we need to, of course, talk about tariffs. How have tariffs really changed your thinking about product sourcing, particularly for fasteners, which we know, of course, are primarily sourced in China, Asia? What other options are you evaluating to mitigate the tariff impact here?
You know, so back in 2018, we did some short-term moves of our supply chain, but it was fairly limited because you just can't change. There's so much QC involved with vetting out suppliers that you couldn't move it fast enough. what we had done quietly over the last 5-6 years is continue in that progress, because the tariffs that were put in place in 2018 were sticking, and we expected more of it to happen, and we wanted to better diversify the supply chain for our customer. We did look at a lot of options. There aren't a lot of options within North America. We looked at some options of doing some manufacturing ourselves. The problem is the economics still didn't work. So it was really for us more about diversifying supplier base in general.
Are the economics of that going to work now in this new tariff regime? I think during the first Trump administration, the goal was to move things out of China. But as many companies are learning right now, it doesn't matter if it's China, Vietnam, or India. If it's not in the United States, there is going to be a tariff on it. At least that's what it seems like is going to be the case.
Yeah, the economics still do not work. And part of the challenge there isn't just the economics, it's the amount of time. When we were researching it very in depth 2.5 years ago, one of the challenges is it's easy to find a site. It's relatively easy to get a building up and get a supply chain set up. When I say relatively easy, I mean time frame of what it takes to do it. The most challenging aspect was the production equipment, of how many months it would take to get that. And so that aspect really pushed us to look more at geographic dispersion of supply chain sourcing, because the economics are still very challenging.
So how much of what you sell right now is actually made in the U.S.?
If I look across what we're sourcing, what our branded suppliers are sourcing, we've always estimated less than 50% is coming from the U.S.
And is that going to stay stable in this new tariff regime?
I suspect it will.
Okay.
So I know Fastenal raised prices back in April, especially as a result of tariffs. Historically, I mean, the company has been able to pass on pricing costs. What's really been the feedback here from customers? Has there been much pushback in terms of the ability and appetite for customers, frankly, to take on additional pricing, especially as we head into the second half of the year?
First off, we sell into a very competitive market. There is always pushback. The real challenge in the equation is communication. And one thing that helps in our supply chain, we're directly sourcing from the manufacturer that's producing the product, more so than most of our competitors in the marketplace, just because of our scale. And so we have the ability to see into the future farther than a lot of our competitors. And it puts us in a position to communicate very well. It puts us in a position to take steps as the inventory is turning. The one unfortunate part of that, it also can create fatigue for your customer. And I would say our customer is at the fatigue point right now, of where it's become challenging, but it always is. And it's all about communication and trust.
We're speaking with Fastenal CEO Dan Forness. The company reported earnings earlier. Shares are higher, reached a new record today. Shares up right now by about 3.7%. I want to talk a little bit about the One Big Beautiful Bill Act that became law on the 4th of July this year. In the press release for your earnings, you did mention it, but big picture, what does it mean for your customers and for your business?
You know, big picture, what it means for our customers is, if you look at some of the depreciation rules and the timing, it makes it very advantageous to make capital investment. And so that's the biggest piece that we see impacting our customers, because our customers have, especially on the manufacturing side, an incredible amount of infrastructure that they're investing in. And so anything that allows them to depreciate faster and to improve their return profile is advantageous for our marketplace. And that's a key element that we talked about in the release.
I know that you talked a little bit about, to us, manufacturing your own products in the U.S. and your suppliers doing it, but I'm wondering about your customers and the way that these so-called America First policies might help them reshore manufacturing back to the U.S. Are you seeing any evidence or hearing discussion of your customers beginning to move manufacturing back to the U.S.? You know,
I would say it's fairly limited, but again, that's not something that happens in 6 months that you set up. We've had some customers set up assembly operations which you can do in a much shorter time frame as opposed to pure production where you're manufacturing components yourself, or you're changing your supply chain to more domestic type supply. But what we've seen is a lot more willingness of making investment even beyond the manufacturing capacity in the short term.
Fastenal has refocused on growing with larger customers. What are the key drivers there, and what additional investments do you need to make to enable growth with those customers?
Yeah, so a position we've put ourselves in for a number of years is we very aggressively made investments, and this was starting back 15 plus years ago, of slowly building an infrastructure to move the supply chain closer and closer to the point of use. And what that involved for us is investing in a tremendous amount of vending infrastructure, and in more recent years, a lot more RFID type infrastructure to measure product movement within a facility, so that you don't have to with human capital, physically observe product being diminished. You can monitor it electronically and remotely. And so we've made extremely large investments over the last 10 plus years in vending technology. And I'm pleased to say that vending technology is all manufactured in the United States.
Yeah, I was surprised when I went to your website earlier today as I was preparing for this to see those vending machines. It's not something that I've run into certainly in my life, but it's pretty cool to see that.
Yeah,
not just soda.
It's a snack machine.
Yeah,
essentially.
That's what I was thinking. It's like it's a snack machine, but you can't eat what's in there. So.
Exactly.
Right. Okay. Hey, we just got about a minute left, and I just want to talk numbers real quick. Gross profit up 45.3%, up from 45.1% over the second quarter of last year. You said it was partially offset by higher import duty costs and higher fleet and transport costs. Are those costs, in your view, going to stabilize?
They're going to continue to rise because of the way our supply chain works. We carry a fair amount of inventory because we have such dispersion in our locations. So we carry quite a few months of inventory. So that's going to keep ratcheting up as we're on a FIFO basis inventory. So as that inventory continues to turn, that will continue to ratchet up a little bit as we move into the third and fourth quarters and into 2026. What really helped us during the quarter and what drove the improvement in our gross margin, set aside the tariffs for a second.
Right.
We put in place a fastener expansion starting last summer to widen our inventory, and that's really what drove our margin this quarter.
Dan Forness, CEO of Fastenal. Really appreciate you joining us. Shares up today. New all-time highs, 3.8% right now.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ trading at a record. The S&P and the Dow both higher. S&P 500 index close to a record right now, 62.71, up by 11 points, up 0.2%. The Dow up 65, up 0.1%. NASDAQ up 68 now, up 0.3%. 10-year 4.42% with a 2-year 3.89%. Gold down $5 the ounce, $33.50. A drop there of 0.2%, and West Texas Intermediate crude down 2.2%, 67 even a barrel on WTI. Bitcoin, major story there, moving through $120,000 for the first time today. Right now, just below that number at 119,917 on Bitcoin, representing a gain right now of 0.7%. GM and LG Energy Solution plan to add more battery production lines at their joint venture plant in Tennessee to make lower cost cells starting in late 2027. The amount of the investment not disclosed. GM right now up by almost 0.3%. Recapping, Bitcoin right around $120,000. NASDAQ at a record. S&P up by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Well, President Trump and his allies have seized upon a new way to criticize Fed Chair Jay Powell, his handling of an expensive renovation of the Federal Reserve's headquarters.
I think if Jerome Powell stepped down, it would be a great thing. I don't know that he's going to, but he should. Jerome Powell's been very bad for our country. We should have the lowest interest rate on earth, and we don't. He just refuses to do it, and yet he's spending $2.5 billion rebuilding the Fed.
That was President Trump just yesterday in Maryland. This construction project offers the clearest example yet of how Trump and those in his orbit are looking for every opportunity to scrutinize Jerome Powell's leadership at the central bank, even beyond his economic stewardship. Bloomberg News Federal Reserve reporter Amara Omeokwe joins us now from our Washington, D.C. bureau. A $2.5 billion renovation, the topic of the renovation coming up when Jay Powell defended the renovations as necessary during his testimony to the Senate Banking Committee late last month.
Some of those are just flatly misleading. The idea of elevators, it's the same elevator. It's been there since the building was built. So that's a mischaracterization. And some of those are no longer in the plans. That's earlier. The plans have continued to evolve.
I do want to bring in Amara Omeokwe. She's been writing about this. She's Bloomberg News Federal Reserve reporter. She joins us from Washington, D.C. $2.5 billion is what is at issue here. What exactly is the Federal Reserve renovation happening right now? And who started planning this? Like give us the details here.
Yeah, so the Fed is currently renovating 2 historic buildings here in Washington, D.C., and they've said those renovations are basically meant to consolidate all their operations in one place and really restore these 2 historic buildings that are very old and that the Fed says haven't been comprehensively restored in quite some time. And so that's kind of the Fed's rationale for these renovations. They were approved by the Fed's board several years ago, so this project is not a new project. The Trump administration scrutiny of it is new, but this project has been going on for quite a while. And so what we're seeing here is President Trump and those in his administration now taking issue with the overall price tag of the project, which has increased in recent years, and then also taking issue with what Fed Chair Jerome Powell said about some of the design features in the renovation when he was on the Hill last month talking about these renovations. And some of the administration officials are basically alleging that Powell was not truthful in that testimony. And that seems to be what they're using to kind of lay the groundwork to say that perhaps President Trump has cause to remove Chair Powell from his position on the Fed's Board of Governors. Because, of course, to remove someone from the Fed's Board of Governors, you have to meet a very high legal standard, which is cause, something like malfeasance or neglect of duty. And so some administration officials seem to be trying to use this renovation issue to try and establish that cause.
Amara, as you mentioned, this is not new. This renovation has been going on for quite some time now. But is this the first time that the magnitude of the renovation is really being questioned?
Yeah, I would say so. And what kind of set this off was media reports about some of the features in the renovation. Basically, there was a media report that sort of characterized some of the features in the renovation as very lavish, very extravagant. And so that led to Republican senators, when Chair Powell was on the Hill last month, that led them to sort of question him over why there are some of these features, why the costs for the project have increased over the years. And so that is what kind of sort of brought this issue into the forefront recently, and then we've really seen the administration kind of seize upon it and use it as part of their overall sort of criticism of Chair Powell's stewardship of the Fed, both, when they're talking about his interest rate, his stance on interest rates, and then also when they're talking about how he has managed this construction project.
What are observers of the Federal Reserve saying about this, and to what extent this could be? This is not part of the Fed's dual mandate by any means, right? Stable prices, maximum employment. The Fed chair has laser focused on that mandate that comes from Congress. He tells us that when we hear from him every few weeks. What are observers saying about this sort of, I'm not going to call it a sideshow because that's editorializing a little bit, but it's not core to the Fed's mission by any means, and it's very political.
It is very political, and I think what Fed observers are saying is that this is just a part of this pressure campaign that President Trump and many in his administration are putting on Chair Powell and Fed policymakers to lower interest rates. Like, Fed observers don't see these things as separate issues. They see it as part of the same pressure campaign. And it also really matters because, of course, we know that Chair Powell's term is up next May, and President Trump's search for the next Fed chair is also on. And so it really does raise questions about what that search will look like and who President Trump will ultimately pick. Is he going to pick someone who is going to be more receptive to his views and the pressure that he puts on them when it comes to monetary policy and some of these other issues about the institutional management of the Fed? And so I think even beyond Chair Powell, it really does raise these questions about what the Fed looks like when the next chair takes over.
Mm-hmm. Amara, in regards to this renovation, what can really be done at this point? I mean, the builders are building. This has been going on for some time. Does the president then have the authority to come in and just cancel the entire thing, scale it back? How does that look?
I mean, I think the Fed has said that a lot of different input went into getting approved for this project, including the National Capital Planning Commission. Like, there are a lot of different bodies that sort of weighed in on this project, and I don't think it's within the president's purview to sort of stop the project. Like, in the law, the Fed has authority over its own buildings because the Fed, in so many ways, is an independent agency. But I think what the administration and what President Trump are really trying to do, they're trying to sort of question the optics around this, right? Bill Pulte, one of the administration officials who has really focused in on this renovation, will say things like, you know, Jerome Powell is keeping interest rates high and making affordability difficult for Americans while he builds himself a $2.5 billion palace, right? Essentially, I'm paraphrasing, but that's essentially like some of the lines of criticism. And so what you really see administration officials doing is really calling into question the credibility of Chair Powell. And again, you can't separate those efforts from the efforts that the administration is putting forward to try and make the Fed follow their lead on interest rates.
Amara, what happens to the Federal Reserve if Fed Chair Powell is forced out in some way? There's a Deutsche Bank analyst who essentially says that we could see a drop of at least 3 to 4% in the trade-weighted dollar. This is George Saravelos of Deutsche Bank. There would be 30 to 40 basis point sell-off in fixed income. He essentially argues that all this is underpriced.
Yeah, I mean, I think any economist you talk to, any investor who you talk to will say, look, if Fed Chair Jerome Powell is pushed out, or if there's any sort of inkling that the Fed is bowing to President Trump's pressure and any questions start to arise about whether the Fed is continuing its independence, like that is not good for the economy, one, and then that is not good for sort of the Buy America trade, right? We could see pressure on the dollar, we could see pressure on treasuries. And so, to be clear, President Trump has continued to say that he's not going to fire Chair Powell. But I think these sorts of questions, again, sort of raise the stakes when it comes to what's going to happen with Chair Powell's replacement. Because any feeling that the Fed's independence is being compromised, or that we have a person who's more likely to listen to Trump, could be bad for sort of the Buy America trade.
Amara Omeokwe, Bloomberg News Federal Reserve reporter, joining us from Washington, D.C. Up next, stocks on the move. This is Bloomberg Businessweek Daily.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Businessweek Daily. I'm Tim Stenovec. That's Norah Mulinda. She is in for Carol Massar. We're seeing stocks higher across the board today. The S&P 500 up 0.2%. The NASDAQ Composite up 0.4%. The Dow up close to 0.2% as we speak. Norah, we went into today's session. I think investors were really concerned about trade tension, especially given what happened over the weekend with the president mentioning a 30% tariff on goods coming from the European Union. But he did say he was open to talking a little earlier, and that seemed to quell at least some near-term investor concerns.
Yeah, clearly. And we're seeing that reflected in the trade today as we're seeing all these indexes rallying higher. It's interesting as we're getting all these headlines, all these things coming in the mix. It seems as though the market is still buying. We
got a big week of earnings. We're going to hear from some of the big banks this week. We're also going to hear from some of the airlines this week. So plus inflation data that's happening as well.
Lots to cover.
Lots to cover. I'm Tim Stenovec along with Norah Mulinda. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Emily Graffeo. It's Monday, Emily, but you're thinking about
the weekend?
Drinks in the weekend? I don't know. What's going on here?
I mean, I guess, you know, it's
not too early for a drink.
Yeah. People can have beer and wine during the week.
People still do
Absolutely.
that? Do they still do that?
People do that. Maybe not Gen Z as much.
Yeah.
Because Gen Z is very focused on wellness. And maybe that's what's reflected in Constellation Brands stock. The ticker is STZ. It's down about 4% today. Again, maybe it could be related to that declining demand from Gen Z, but we also got news on the Trump tariffs. So President Trump declared a 30% tariff rate for Mexico and the EU. There wasn't anything specific about alcohol, but these are key markets for drinks makers. So not only Constellation Brands is down, but we're also seeing Brown-Forman, Boston Beer, Molson Coors down. Constellation makes Modelo and Corona, and Citi noted that 100% of their beer profile is brewed in Mexico. Of course, this all hinges on, is that the tariff rate that will actually stick?
Yeah, and I'm looking at shares year to date, down 25% for this company. So it seems as though people are a little bit here on the stock here.
Right, and you hear a lot about like drinks makers and beverage companies trying to pivot away from alcohol, and I feel like every other day someone is introducing a non-alcoholic option.
Right.
I think it's a general cultural shift away from drinking a lot. That's weighing on these companies as well.
Yeah, low-calorie options. People like an alternative these days.
Hey, speaking of a cultural shift, it seems to be that we're seeing a cultural shift when it comes to Wall Street and it comes to crypto, with Bitcoin reaching a new all-time high. I know you're watching a crypto company.
Yeah, this is a big milestone. Bitcoin topping 120K. It felt like just a year ago we were talking about how it was at like 60K. But I'm looking at Coinbase specifically because this is kind of a company that embodies that idea of digital asset DeFi becoming more mainstream. Coinbase, of course, is a crypto exchange. They're in the US. They joined the S&P 500 a couple months ago. And so that stock is higher today. We tend to see whenever there's like Bitcoin reaching a new high, Coinbase does well. And then also just watching the space for this week because the White House is calling this crypto week. There's going to be some bills that Congress is voting on this week that would clarify the structure of the crypto sector and regulations around it. So all around, it's like a very bullish day for crypto. And Coinbase, the ticker there is coin.
How fitting. You're also looking at Rocket Lab, right?
Yes. So Rocket Lab, ticker RKLB, is at a record high right now. It's up about 7%. Citi raised their price target on this stock. They said that the price target comes as they shift their valuation methodology to the company's revenue potential, which, if that sounds a bit boring, there's also some actually space related news in here. This is a rocket satellite company. They said they expect revenue to grow roughly $2.6 billion, driven by 20 Neutron launches per year, further satellite construction wins, particularly for U.S. government programs. So I don't know. I always think space is interesting, and certainly investors like to bet on it.
Yeah, this is interesting. It's a $22 billion market cap as of now. It's tiny compared to, in terms of launches, in terms of capabilities versus SpaceX. But Emily, it's always interesting to see what this company does.
Yeah.
In the wake of any tension that we see between President Trump and Elon Musk. And we've seen it move quite a bit over the last 6 weeks or so, as the president has threatened to pull SpaceX contracts. To what extent Rocket Lab could actually fulfill what SpaceX does, that it can't do that at this point. There aren't that many competitors. There aren't really, that can actually do that. But,
it's up 640%.
It's
over
insane.
The last 12 months.
It's insane. Looking at all these aerospace or these space stocks here, I'm looking at an ETF. It's ticker UFO, Procure Space ETF, up about 30% this year. But if you really dig into some of the names there, lots of activity to watch.
Imagine if SpaceX was a public company, how much higher that ETF would be. There are certainly some ETFs that hold, a bits of it, but it's obviously private.
Bloomberg News cross-asset reporter Emily Graffeo. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcast. If you're sticking around on TV, The Close is up next. If you're going to join us on Bloomberg Radio, YouTube, or Bloomberg Originals, Emily Graffeo is sticking around. And so is Norah Mulinda. That's next.